Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner from One Market today in San Francisco. Front and center this hour, your post-Fed playbook. Stocks hit record highs following yesterday's rate cut. We will debate now the road ahead with the investment committee as always. Joining me for the hour, Josh Brown, Joe Terranova, Jenny Harrington, Malcolm Etheridge. We will check the markets. I told you stocks at record highs. The Russell today is outperforming. It, in fact, is trying for its first record close since November of 2021. Of course, the big question for everybody today is now what? What to do following that rate cut and the idea that more are coming. On that note, David Tepper was on Squawk Box this morning and laid it out pretty clearly. Take a listen.
Don't love the multiples, but how do I not own it with an easy, I'm not ever fighting this Fed, especially when the market's telling me I don't know what it is today, but 1 3/4 more cuts, before the end of the year. So that's a tough thing not to own.
Josh, that pretty much says it all. I'm not ever fighting this Fed, as he has really maintained from the depths of the financial crisis. When the Fed gets involved, you just don't fight it.
Well, I think the old playbook works just as well as any new playbook that anyone can come up with. And I think market participants have been sniffing this out for months. Small caps and financials. You can do other things, and we can get more specific looking at home builders, et cetera. But small caps and financials are really the playbook. And that trade is en fuego already. Right at all-time highs today on the Russell 2000. If the Russell 2000 closes today at an all-time high, which is possible, I'll let you know in 4 hours if it happens, this would be the first all-time high close since November 8th, 2021. That's 967 consecutive days without an all-time high in the Russell 2000. That's the second longest streak in the history of the stock market. So we talk about big bases and breakouts and consolidation periods that are resolving to the upside. This is like the mother of all consolidation periods for the Russell 2000 segment of the market. We also have 36 financials on our best stocks in the market list. We talked about a bunch of them the other day. JP Morgan, MasterCard, Bank of America, Wells Fargo, BlackRock. You want to be long a market where those 5 names are among the top performing stocks. Then you look at small cap financials, which scratches both itches at the same time, right? So you've got Interactive Brokers, which we talked about. Synchrony, we talked about. Huntington Bank, I did 10 minutes on HBAN the other day here on the show. Look at the way these stocks are trading. Huntington Bank is 4% above its 50, 10% above its 200. There's no resistance above. Stock is only up 9% year to date. You didn't miss anything. There's been no multiple expansion for the financials. None. You're not paying up for these stocks. The financial sector is selling at the same PE multiple it was selling at in January. So what's the playbook? What do? This is the thing that always works. It doesn't require the Fed going down to 2% Fed funds rate. If the Fed is on your side, small caps should work. Financials will almost definitely.
So, Joe, is it that simple as David Tepper lays it out? I mean, he's always had this amazing ability to just distill it down to the most easy to understand things that are going to drive the markets. I'm not ever fighting this Fed.
No, you're not going to fight the Fed, and I think you also don't want to fight the calendar. I do think we set up here for a possible chase for performance. And to Josh's point, there's also the conversation about pivoting in a different direction where there has been some form of relative underperformance. Josh is talking about the financial sector. Look, the reality is, and in this business, you have to take satisfaction as an investor when you're investing in a particular direction and you get rewarded for it. I'm very proud. I'm very satisfied of what Joe T has represented. It took a overweight position in financials in January of 2024. I want to fight the calendar. You're going into a rate cutting cycle. You see that small caps are rallying. You see that financials are rallying. What do I want to do? Do I want to find a single financial? And I basically just bought more Joe T because we own 40. Want to find a single financial? And I basically just bought more Joe T because we own 44 names. We own all the regional banks that Josh is talking about. We own the money center banks. And I think collectively the sector benefits from not just that, but also investor engagement, an increase in M&A, and regulatory relief. So front and center, to me, that's where the financial sector is right now. And I think it's represented in the price action. And clearly you don't want to fight that.
Malcolm, it's financials with a record today, as we've said. Citi is a 52-week high, Goldman record, Morgan Stanley record, B of A 52-week high, JP Morgan record high. Mike Mayo talking about it, of course, from Wells Fargo Securities today. You get rate cuts, you get no recession. You're going to get a continued rally in bank stocks. It's the housing trade, as Josh was mentioning. You've got price targets going up almost across the board from some firms because of the rate cut. You have the gold move, you got the small caps move. But let's start with the financials. What does your exposure look like here?
Yeah, Scott, I hear everything that Joe T is saying. I hear everything, the case that Josh laid out for the small caps, which tend to lean financials more than anything else, and the rate cutting cycle being the perfect time to be owning these. But I would argue a little bit differently that as a person who looks downside first anytime it's time to make a new investment, I don't necessarily want to be owning the banks that are below the big six. And realistically, I think the big three, JP Morgan, Goldman, and Morgan Stanley, are where I would cut it, simply because the banking sector itself has ceded a lot of ground over the last decade to the private credit market that's taken over the commercial lending space, which tends to be the biggest piece of that business, which is very sensitive to net interest margin. That is the metric that really matters as a shareholder when quarterly reports come out. And that metric doesn't so much matter anymore for the likes of the big three that I just named, who make the lion's share of their revenues from deal premiums that come on the backs of M&A transactions, wealth management, those sorts of things. And so as an investor, I hear you. I really love the momentum behind the financial sector as a whole right now. But just thinking about us potentially being at all-time highs in the market and everything else that we've been discussing, I would much rather own the safety of a well-diversified financial than having to worry about one that's very sensitive to interest rate moves.
I'm surprised you don't own any of the major banks. That just feels like a miss. However, you nuance it. No JP Morgan, no Goldman Sachs, no Morgan Stanley, no Bank of America. Why not?
Yeah, so we do own it in our growth and income portfolio for a number of clients, all three of those names you just mentioned. I personally prefer the fintech space because I think there's a tremendous amount of upside. If you look at the name like a SoFi, for example, which I do own personally, their core competency to me is buried underneath the surface, which is their ability to offer banking as a service technology to other banks that don't want to have to go out and get their own bank charter to offer banking solutions. So that tends to have a much bigger upside potential and is not so interest rate sensitive to me versus something like a traditional financial like we just described.
Jenny, your favorite name, your only name is Columbia Banking. Why?
Well, okay, so if you're picking out that specifically, Columbia is in the dividend income strategy. And
well, I'm picking it out specifically because I have it as the only one you own.
Okay, but if we were to spread
what do you want me to do?
say like, all right. Well, because you can't say, Jenny, why don't you own financials, right? You should own the large cap financials. They don't have the dividend yield. They don't have the free cash flow yields for me to own them. So I have to say, where can I find yield? And I think there's upside too. So I've owned Columbia for several years, and it's been a great performer. Not this year. This year it's mediocre at best. Once you put the dividend yield in, it's a little bit better. But we take a broader lens. And so we also own Schwab, which is up 26% this year. We own American Express, which has been a great performer. The big banks just don't fit our strategies. They don't have the free cash flow yields that we need.
I mentioned the home builders and B of A raising the price targets on a number of firms today. 8% on average is what they've done. D.R. Horton goes to 175. Lennar goes to 135. Pulte Group 145. Toll to 155. Lennar, by the way, reports earnings after the bell today. Josh, you were just talking about the so-called ice age in housing last week, maybe finally melting away, which is why you pitched Home Depot to Al Michaels live on the air. Is this now the place to lean in as well? You figure you got your rate cut, and you're likely to get more.
Yeah. So the top 10% of Americans own 90% of the stock market. But when you look at all Americans and ask what is their biggest financial asset, it's their home. Now, for most of them, the home is not in the investment bucket, it's in the consumption bucket. But even still, not having the ability to sell a house, trade up to a bigger house, downsize to a smaller house because of the interest rate situation, having 7% rates plus on a 30-year mortgage for 4 years, it's literally economically crippling for millions and millions of households. Plus, it slows down this unbelievable demographic tailwind that we have. We have millions of 29-year-olds, 30-year-olds, 31-year-olds. They want to get married, they want to get pregnant, they want to buy a house. They've been locked out of that market because of several factors, obviously supply, but also the affordability crisis and the rates on the 30-year mortgage. With that coming down, it produces a cascading effect that is positive for the entire economy. This is when people are spending the most money in the real economy, on Main Street and at the big box stores. Home Depot gave us a preview of what that looks like as that ice age thaws out. And I genuinely believe if this bull market that we're in is going to have another 3-4 innings in 2026, it's not going to be all AI. It's got to be related to improving situation in the home building, home buying, existing home sales, starts, renovation, mortgage refi. All of that is still on the runway. So I'm long Rocket. I think it's got the most leverage to falling mortgage rates and all of the great things that happen as a result. The XHB is up 10% year to date. That's nothing. That's nothing. That is not pricing in what could go right in the housing market next year. So I am bullish in the area. I mentioned Home Depot as a best stock in the market. I like that one too. Sherwin-Williams looks great. There are a whole host of plays here. A lot of them nobody's been talking about for, I don't even want to say quarters, I want to say years.
Malcolm, you have Rocket as well.
Yeah, it goes back to the theme of fintech that we were talking about before. I don't really consider that one a housing stock so much. And I think that Rocket is especially attractive right now because they've been making some key acquisitions at a time when the market has been very frozen. So interest rates falling perfectly coincides with them absorbing Redfin, which turns it into a tech solution, with them absorbing Mr. Cooper, which is a mortgage servicer, which makes their life a little bit easier and allows them to go vertical in that tech stack. So I think it's a great time to be owning a company like Rocket. And I think, to Josh's point, there's probably a good bit of runway still to be had here, especially since we're still talking about mortgage rates. Even with the slide in recent days, we're still talking about something with a 6 handle on it. So it'll probably be a while before we get into the 5s and the real boom takes hold.
Joe, why none for you? I mean, if you look at the momentum
yes,
behind some of these names, it looks to me like it's developing. Or, I mean, D.R. Horton's up 40% in 3 months. And the gains from Pulte and Toll are similar. Lennar and KB a little bit less, but still plus 25% for both of those names. What's the problem?
So I like the word developing because that's exactly what's going on here. We sold out of the home builders collectively. NVR is a name that you have not mentioned. You could include that in the list that you already did. We sold out in January of 25. We owned them in 23 and 24. I checked this morning in advance of the segment. Each one of those positions was profitable. Right now, the momentum is developing. It's building. It's strongest right now in D.R. Horton, also relatively strong in Lennar. And Josh's Home Depot looks excellent as well. The end of October, we'll see what strategy goes with it. But for sure, you have building momentum.
Guys, we need to talk gold today, too. It's pulling back a little bit, but it's been on this remarkable run. As everybody knows, up 39%. Hasn't rallied this much since 1979. Deutsche Bank goes to 4,000. They were at 3,700. Jeffrey Gundlach's been very bullish on it as well. And he told me yesterday when we were sitting out in Los Angeles that investors should own a lot of it. Listen.
I still think a 25% type of weighting in portfolios of gold is not excessive. I think that...
Really? 1/4 of one's portfolio in gold?
Yeah, I think it's not excessive because I think that is an insurance policy and it's in a winning mode because of the weaker dollar.
Jenny, how about that?
Come on. So I had the same response you did, which was really, I was listening to that interview while you did it. And to me, 25% gold in a portfolio, yeah, I think it is a bit excessive. Now, look, Gunlack is super smart. He knows what he's doing, but I would personally never put 25% of a client's portfolio into gold. Part of that for me is pragmatism, which is most of my clients need a portfolio that's like really working for them in terms of income generation, and gold doesn't generate income. My other concern with gold is I've always seen it, and this was really trained into me during business school, which is gold is a speculation. Gold is not really an investment. And that's a wonky nuance. But the thing is, when something's a speculation, you are entirely dependent on other people's behavior and what they want to make that share price go to. You can't look at gold and say, oh, it's going to produce these cash flows over the next 5 years or 10 years, therefore the value should be this. And I think as a result, you can have a lot more volatility in speculative commodities than you can in stocks or bonds. So for me, I think the safer bet is to have a much higher percent of your clients' portfolios in stocks and bonds. I don't have anyone in gold right now, but I'm not a bigger picture asset allocator. I thought that was an aggressive comment. Entertaining
Joe,
and interesting to think about.
It's not so much that we need to debate the degree to which somebody needs to own gold or how much they do. It's simply if you're making that type of call, you're obviously bullish on where that asset is going in and of itself. So don't tell me whether it's good or bad for 25% of one's portfolio in it, but just about the nature of the call itself, that you need to have exposure to gold for a variety of reasons, as people have held it over the years for those very reasons. But the fact that it's just going higher, that's the call.
Is it?
So take a piece of paper, divide it down the middle. On the left, write the reasons to own gold. There's many. You've cited some already. On the left, cite the reasons not to own gold. The reasons not to own gold is because it's going up. That's not a reason to get out of something. Right. It has the momentum. It has the fundamental tailwinds behind it. What we have in the ETF is Newmont mining. But I also think if, in fact, you're going to go through a cycle of rate cuts and the dollar moving lower, that trend is not over. I know since yesterday's Fed announcement, the dollar has lifted marginally, but the prevailing trend is a lower dollar. That benefits gold. And I also think it benefits commodities in its entirety. Commodities and investing in commodities, I think investors have fallen asleep a little bit on that, besides the performance they've gotten from precious metals. If we are going to see a continued lower dollar, you have to think about investing in commodities. Coffee's up 30%. Precious metals are up. The rest of the commodities, they have not performed well. This might be an inflection point.
No, good point. Because the inverse correlation, obviously, weaker dollar, typically good for commodities. How about small caps? So Josh mentioned at the top of the show, they are the outperformer today. We're obviously going for the first record close for the Russell 2000 in an awfully long time. Bank of America says their regime indicator says recovery's here by small caps. Malcolm, is this now the moment? We've been debating this, feels like forever. And I've heard, well, you got to wait until the Fed cuts to actually buy, not in advance of that. Okay, this is the moment. They did cut. So is this a buy?
Yeah, you didn't hear that from me, because I am not in the camp that thinks the rate cut is really going to be all that meaningful for small caps. I think you would have to have a significant break in investor psychology to separate us away from the biggest 10 companies that are really moving the S&P 500 right now. So forget about, for a moment, the small caps in the Russell 2000. It's the rest of the S&P 490 that needs a little bit more love. And so I think that realistically, it'll be a little bit of a bump in small caps, because that's typically the knee-jerk reaction. That's the trade in a rate-cutting cycle. But in the next month, I doubt we'll be talking about the Russell 2000 really knocking the cover off the ball. It's usually 1 year out of maybe 10 where small caps tend to do well, and we've been sitting and waiting for that to occur for quite some time. So I'm just not a real big believer that this is the moment that small caps are going to get that resurgence we've been talking about.
10% year to date, Josh, for the Russell 2000. What do you make of what Malcolm had to say? You disagree?
No, I don't disagree. Look, I think the thing about asset allocation and portfolio management, and it's easy to forget this. asset classes tend to move in trends and streaks, and it's really hard to know when one will start. It's really hard to know when one will end. There are all sorts of false signs and signals along the way. In the case of small caps, we've had numerous false breakouts that have led to this kind of thing where it's like a 6-week rally, then it falls apart. But in this particular case, the breakout is so widespread, and it's being so driven by the financial segment that I would just say, like, every once in a while, you have to remind yourself there are 5- and 10-year periods of time throughout history where small caps have outperformed the S&P. I know it's hard to imagine because we all are affected by the recency bias. Over the last 15 years, that just hasn't been the case. But nobody can tell you definitively that over the next 3 to 5 years it won't be. So when you're building a portfolio and you're allocating assets, it's okay to have underperforming asset classes relative to NVIDIA. Not everything has to be neck and neck with the leaders of the market, because these types of regime changes do happen, and I think you need to be there in advance in order to benefit from them.
All right, you mentioned NVIDIA. I mean, another record high today for the tech space. Obviously need to talk about that, but it says so much about what's happening in the market that it's 20-plus minutes into the program, and we're literally just getting to tech. Alphabet, a record high today, the target to 285 at Piper Sandler. Meta today is holding its Meta Connect event. It's a big deal, obviously, out here. Mark Zuckerberg unveiling $800 Meta Ray-Ban display glasses. Julia Boorstin is live in Menlo Park for us today. As price targets are going up today, there's a lot of optimism around this name, Julia.
Yeah, Meta share is rising this morning, up about 1% now after the company showcased its new hardware. And the star product were these Meta Ray-Ban displays that I got to demo last night with an in-lens display and a neural wristband, which allows users to pull up messages, take and watch videos, get directions, and ask questions of Meta AI, as well as get the answers or recipes. All of that within the glasses. You see it within the lens. Now, these Ray-Ban displays, along with upgraded Ray-Ban Meta glasses and Oakley Vanguards, are Meta's most ambitious bet yet on hardware. And Mark Zuckerberg's conviction that glasses are the best way for people to interact with AI. Analyst Gene Munster says the pricing between $379 and $799 signals Meta's ambition to sell tens of millions of units next year, up from about 5 million units this year. But it does come at a cost. The company has invested $65 billion or so in its Reality Labs division since changing its name to Meta in 2021. And it is unclear how fast the audience will grow for this totally new form factor. And it is technically challenging. A couple of live demos failed last night when the glasses didn't respond. Zuckerberg blamed the Wi-Fi. Scott?
All right, Julia, thank you. Julia Boorstin in Menlo Park. Highest price target bump today goes to Wedbush, $920. Jenny, give me something on Meta.
So this is what we struggle with, which is how profitable is Reality Labs? And do we really believe in these Meta glasses as the next thing to drive it? Like, on a personal note, separately, I don't think I want to live in a world where everyone's walking around wearing them. But if you put the numbers to it, Meta lost $18 billion last year in Reality Labs. So let's say they don't have the success that they expect to, and they scrap Reality Labs. That could actually boost net profit significantly. Net profit was $72 billion. They had an $18 billion loss. So for us as investors looking at earnings, we're like, maybe this isn't the place to be. And then I pair my personal opinion, which is I don't really love the idea of everybody walking around watching TV out of one eye and having too much information on me. So we'll see where it goes. I'm curious if Mark's right that the best way to interact with AI is through the lens.
Yeah. Elsewhere in tech today, as you probably know, Intel up big. NVIDIA making the investment there. Best day in decades for that stock. The is SMH, the semis ETF, best day since June, up 10 of 11 days. You guys know about that. Software is big in the news today. CrowdStrike gets a number of target hikes after its investor day. So there's a cyber, speaking of IPO, Netscope pricing at 19. I think that stock is actually opened for trade already up at the NASDAQ, so we can maybe get a look at that. Josh Brown had a new buy. We will do it now. It's Electronic Arts, right?
Yeah, so I pitched this on the show, I think, 2 weeks ago, and the stock technically looks great, so I'll just address that. It's 5% above its 50, 15% above its 200-day moving average. RSI is 58, so it's cooled off a little bit, and it's about 5% below 52-week highs. But the stock is very stubbornly hanging up there after a really big breakout, and this is exactly when I like to enter these types of situations. And I got to tell you, the fundamental catalysts here are really exciting, and I'm not a huge video gamer, but they announced some huge launches. Battlefield 6 is obviously the big one. This is a marketing investment, the largest ever that EA has done, and it's I think a game that could revolutionize the industry for the first time. They're allowing user-generated content in the game. There's a big interactive component. It'll be relevant on all platforms, iOS, all the consoles, PC, etc. But they've got Madden, NFL 26 now, FC 26, NHL 26, college football 26. It's the most ambitious release cycle in the company's entire history. So you've got the situation now where the fundamentals are breaking out alongside of the technicals. They have a new $5 billion share repurchase plan that was authorized last spring to replace a $2.6 billion share repurchase plan. So they are aggressively shrinking the float while earnings are growing, new launches are coming out, and the setup here makes it really clear to me. I don't think there are a lot of sellers. Once it goes, I think it could really go. So I'm long, I've got a trailing stop loss, and the big launch for Battlefield is coming up in the second week of October.
Joe T owns this too, right?
Sure does. Bought it back at the end of July. Josh did a nice job describing the technical and fundamental tailwinds. I would add to it, they're building their free cash flow. And in addition to the technical momentum in July that we saw building, we like the acceleration in the revenue growth.
Yeah, look at the stock getting a bit of a move. It's a nice segue into your best stocks in the market list today, Josh, because you've had Expedia on it since last month, almost a month or so. Why are we highlighting it today?
Okay, so Expedia has had a huge move. It broke out after a really long period of consolidation. The reason why we're highlighting it today is because I think it's shaping up for an entry. When you have stocks that, I wouldn't say went vertical, but when you have stocks that after many, many years finally make an all-time high, a lot of times there's a little bit of a retracement back to the previous point of resistance. That's what I think is playing out here with Expedia, and I would let it happen. But if you look at the highlights from their last earnings call, they are just absolutely on fire. People thought that all this enthusiasm for travel was going to fade away after we all got it out of our systems in 2022 and 2023. Here we are in the summer of 2025, and the superlatives to describe the middle market to high-end travel business are still just absolutely off the charts. Expedia also has a $5 billion share repurchase plan, which they first authorized a couple of years ago. They have been buying stock back hand over fist. In the second quarter, they bought 3.8 million shares for about $627 million. That's on like a $27 billion market cap, just to give people a sense. In the first half of this year, they bought back 5.5 million shares of stock. And they're diversifying away from the business that we all know, the core B2C business. They have an advertising business that's on fire, very high margin business, which boosts profitability. The B2B business looks great as well. So I think an entry is setting up. I don't think you have to pull the trigger right this second. It made a big move to break out, and now I think you have this period of time between now and the next earnings report in October to start to accumulate. So I'm not in the name myself right at this minute, but that could change.
Shares of Live Nation we did just before the break. They're under pressure today after the FTC in 7 states are suing the company for illegal ticket resale practices. Josh, you own the name. We were going to talk about it even before this news came out, because at the CNBC Game Plan conference the other day out in Santa Monica, Michael Rapino was there, just bullish on the overall environment, and even talked about concerts being underpriced and the opportunity that is still left in that regard. Shares are up 40% in the past 6 months. It's on your best stocks in the market list, but now you have to take into context of what the FTC and these attorneys general are doing.
Yeah, well, there's not that much of a reaction in the share price. And I think one of the main reasons for that is this is a company that has repeatedly been involved in these types of disputes because people are very passionate about being able to see their favorite artists, not overpaying, not having to deal with scalpers, et cetera, et cetera. It's highly contentious. There was something called the Bots Act passed in 2016, better online ticket sales. And as part of that act, there was a limit placed on automated, like bots, literally, buying up huge amounts of tickets and then reselling them. What the FTC in these 7 states are saying is that Live Nation and Ticketmaster didn't do a good enough job monitoring whether or not these types of automated buys and sells were taking place on the platform, and they're alleging that the company is allowing it to happen because they're making more money from it. The company hasn't responded yet. I would imagine there will be a response, but I've been in the stock since $75 a share, and they've been fighting off different versions of this complaint and others the entire time. Again, they're very large, they're very powerful, they do an amazing job, but people are passionate when they get locked out of Taylor Swift or the site crashes while their favorite artist is selling out a tour. They get angry, and this is something that's really easy to score political points with. So I support Michael Rapino and Live Nation as a shareholder, as a user of the product, and I think the stock will be okay.
All right, let's do some final trades. Malcolm, what do you got today?
Yeah, I said it once. I'm going to go SoFi again. Share just hit an all-time high, and I look for upgrades to start lifting the stock price next week.
All righty, thank you. How about you, Jenny?
Clearway Energy, 6.5% dividend yield. I actually spoke to the CEO this week, and he confirmed that their objective is to grow the earnings, grow the dividend. And while the share price is impacted by rhetoric about clean energy, the business is not.
Thank you. Joe?
Scott, we talked a lot about small caps, the IWM. That has healthcare has a sector weighting there of 16%. Take a look at the XBI.
Okay, and Josh?
CrowdStrike up $50 today. Raise the roof.
All right, good stuff, everybody. Thank you. The exchange.
So let's bring in Tom Lee, not the drummer. Tom, what do you make? I mean, does the Fed, how much does the Fed really matter to the equity markets right now?
The Fed still matters a lot because they are the most powerful institution in the world. And it matters because monetary policy, relatively tight, has kept the ISM below 50 for 31 months. And so corporate America has operated with a bit of caution, keeping the car in low gear because they didn't know where inflation was going to be and they didn't know where monetary policy was. So I think when the Fed begins to ease, it's not just a move in interest rates, but it's a green light for corporations to get more confident. And as you know, the ISM moving above 50 does not only revive economic activity, it probably also rejuvenates the labor market, which has been sluggish for what looks like more than 12 months.
So does that mean if the Fed stays dovish or keeps cutting, that there's other newer legs to this pretty remarkable stock rally?
Yes, and I might even say that I think that we could have growth recover without inflationary pressures. I think reflexively, people the last few years think growth picking up means there's automatic inflation. That has not been the case for 25 years. But I think if companies begin to expand, plus the fact that we know AI is driving productivity gains, and that's really a big tailwind for businesses, and then we know that there's initiatives around Wall Street boosting productivity because they're going to build on the blockchain, I think there's a path for growth to be stronger next year without a pickup in inflation. That's going to be very good for profits and for equities.
Yeah, and listen, we've talked about many times, Tom, and I know you've talked about Scott and others as well. You've been long, you've been strong, you've been correct. But is there, at some point, does this market take a breather? It's getting, listen, as a 401k holder, I like it. But as a TV analyst who's been doing this for almost 30 years, I'm starting to worry about it a little bit.
Yes, I mean, a pullback is going to be inevitable. But from a timing perspective, sentiment still remains staunchly negative. So, I think that the gold standard is the AAII, net bulls, less bears. That's been 6 consecutive weeks where it's negative. that's never really marked a market top. I mean, that has to flip positive and sustain for several weeks. So I think if we're going to say between now and year end, could the market pull back? I'd say it's possible, but to me, it's probably from higher levels. I think there was a lot of skepticism about even yesterday's FOMC. I had a lot of clients tell us they thought the stock market would sell off because 25 was priced in. But because almost everyone told me that, that was the consensus view. I think people were cautious into yesterday. And that's why we're seeing the groups that should rally big, like the small caps and the cryptos and the financials and even the Mag 7.
We might even get a record high for the Russell 2000, about, I don't know, 75, 80 minutes left to go. We'll see what happens. Tom Lee, we're going to let you go, but always appreciate you coming on, Tom. Thank you.
Good morning, everybody. It is Friday, September 19th, and it's 10:11 a.m. Eastern Time. As I'm recording this video, you can see the charts are still moving here, and the markets are up slightly. Okay, the Dow's up 0.17%, NASDAQ is up 0.46%, S&P 500 is up 0.24%, and the Russell 2000 right now is down 0.3%. We just saw some clips from the halftime report. That was Josh Brown and guests there. From yesterday. That was from yesterday's episode on September 18th. And Tom Lee yesterday was also on Power Lunch. Okay, so we saw a quick little clip from Tom Lee as well. Still very bullish in these markets. And what we're gonna do in this video is discuss the stocks that they talked about, right? So one of the things I like to do is I like to take notes from the shows. And here are a number of the stocks, not all of them. But you can see CrowdStrike's in there, gold, granny stocks. That's the ETF by Tom Lee. We're going to look at that one. We're going to look at Huntington Bank Shares, KBE. We'll look at Newmont Corporation, one of the stocks that's actually in my portfolio currently, and is up over 13%. You can see here I added it back here on August 25th. It was one of the stocks that I shared with Legend level and Blue Cloud Trader level members, in the weekend video. So this weekend, I'll be doing another members only video. This is what they look like right here. This is what they, so here's the most prior one 5 days ago. Then there was one 12 days ago, and so on, so forth. So look out for that either tomorrow or Sunday, most likely tomorrow. I'll be posting it. Going over 20 new stock ideas for this upcoming week. Okay, for Monday. I do my analysis every morning, Saturday morning. I look at the sectors. I look at the industries. I look at the strongest stocks within those sectors and industries. And then I, of course, analyze the individual stocks using my favorite indicator, the Ichimoku indicator right here. That's that cloud that you see right there, that Ichimoku cloud, the Tengen-sen, the Kijun-sen. And that's how I decipher the strongest stocks. I look at both the weekly time frames and the daily time frames to assure that I'm adding a position that is strong on both time frames, so there's a higher probability of a winning trade. All right, so first thing we want to do is let's also take a look at the heat map real quick. I want to see how the stocks are doing this morning on the heat map. Here we are, and what you'll see is right now Tesla's up 2.69 this morning. Apple, Microsoft, Nvidia's up, or Oracle. Broadcom's down. You can see some of the semiconductor stocks that are down this morning. Industrial's not looking that great. And if we look at the groups, how are they doing so far? One-day performance so far. Basic materials, consumer cyclicals are at the top. Energy, industrials at the bottom. Okay, let's get into the stocks. We'll start off with the S&P 500, the SPY ETF, and of course, as well, right now it's down 0.03%, as you can see. So it's down a little bit this morning. And here's the timer down here. You can see the seconds basically moving. But is the trend still strong? Absolutely. Okay, we're still above the moving averages. We're still above the Ichimoku cloud, the Senko Span A, the Senko Span B. This is in the correct order. We've got the light colored blue line above the purple line. We've got the 9 period, which is the green line above the red line, which is the 26 period, Kijun-sen. So this is the Tengen-sen. You'll hear me saying that way, that name. And this is the Kijun-sen. And we want price to be above it, right? We want that little candlestick there to be above the moving averages. And then we've got the Chikou span right here. That's today's closing price. Well, it's not the closing price right now because obviously the market's it's still moving, right? You can see it moving. but the current price, so whatever that is, it's projected 26 periods into the past, and that's where you'll find it. And what we're looking for is to see where that white line is in relation to the candle. All right, 26 periods ago. If it's above it, it's bullish. If it's below, it's negative and bearish. And here's an example where the white line was under the candles. So you'll always get, it's always going to be 26 periods, lagging. Okay, and the cloud itself is always 26 periods into the future. Very unique indicator. And the other thing about the moving averages is the fact that they don't take the closing prices like most moving averages. Like the 200-day, for example, is a simple moving average, right? The way it's calculated is by taking the closing price each of the last, on a daily chart, last 200 days, right? And then plotting it. And that's that dotted yellow line. So we also want price generally to be above that dotted yellow line there. With these moving averages, the way it's calculated is they take the high of the candle, the low of the candle, okay? They divide that by 2. So you're getting the absolute midpoint of each candle, all right? Absolute middle. And then they plot that right there for the 9 periods, and here's the 26. And interestingly enough, the Senkou Span B is also calculated by taking the last 52 periods, the highs and lows divided by 2 of the last 52 periods. Instead of projecting it right under the candle, it's actually projected into the future, like I said. So that would be the purple line right there. And then this Senkou Span A, the light colored blue line, is projected by taking the midpoint of the 2 moving averages. So you take that right there, and you go 26 periods into the future, and that's where you'll find it plotted. So it's giving us mathematical, it's based on math, and it's showing us the averages, and it's a very unique style. Japanese, incepted originally in the late 1930s, this indicator, but then published in the late 60s, and then we brought it here and started utilizing this in the 80s, I believe, in the United States. And a lot of financial institutions utilize this indicator, including Tom Lee's one of Tom Lee's heads of technical analysis. I forget his name. I always forget his name. But so a fun strat. Anyway, let's do this, folks. So we're looking at the SPY right now. Oh, someone asked about the directional movement index, so I thought I'd give you guys a quick little synopsis about this other indicator that I have down below here, so that you understand why it's even here. What's the purpose of this indicator? Well, it helps me to identify the momentum. So ADX, okay, I've got it at a setting of 9, which is unique. It's not the same traditional setting, but ADX 9, and the white line, that's the white line that you see right here. If you see that white line moving up, that means that the momentum is increasing. And if you look above, for example, where it started to move up right there, you'll notice that price started moving up, right? So that's what we're looking for. When the momentum, the green line, and by the way, the green line needs to be above the red line for a bullish scenario. It's the opposite if it's bearish. Now, when the ADX starts to decline, like you see right here, and if we go straight up, do you see what just happened there? Look at the price, dropped, okay? So that's a little bit of a heads up, like a canary in the mine that's going to give us a heads up that, hey, the momentum is decreasing here. Here's another example of that same situation here. You can see the white line was moving up, and right about this point right here, let me throw that arrow back up. If you go straight up, okay, that's the candle, and then it dropped for like 3 days after that. And it could be short-lived, right? By the way, the ADX is agnostic, meaning it doesn't really matter which of the lines is above. So in the case here, let me just zoom in a little bit closer. I just want to show you the opposite scenario where the red line is above the green line. That's when you know that things are not bullish anymore. The trend, that's what the directional movement is, right? So it's telling us that, hey, there's a possibility that once that red line crosses above the green line, now we're in kind of a negative territory. And if we start seeing the white line here moving up, okay, like it did here, while the red line is above the green line, the momentum is increasing, but not to the positive side, meaning, as you'll see here, if we go straight up, we got that warning right at that candle, right? Look what happened. Drops. what happens over here where it starts to move sideways right there and the momentum's lost? If you go straight up, it started moving up as the ADX. So the negative DI line can still be above the positive DI line while price moves up if the ADX is moving down. Does that make sense? I hope so. Anyway, and so that's how we can quickly assess what's really just a little more confirmation, so we understand what's happening in the markets. Anyway, so that's the SPY. Here's the QQQ ETF still moving up strongly here, very strong uptrend. By the way, the Qs, all of these that have a blue flag mean that they're bullish on both time frames, the daily and the weekly. There's the weekly chart. Here's the SPY on the weekly. Here's the Dow on the weekly, very bullish, right? Very bullish. Here's a daily chart. Down slightly today, but it's still a strong uptrend. Russell 2000 today broke above the 244.98. That's all-time highs now, right? Wait, yeah, it is, folks. Remember, we were waiting for that to happen? Here's a weekly chart. And so we need to go, in fact, I'll go to a monthly to make this even more clear. All right, here's the candle that hit the all-time highs right here. That happened back in 2021. November 30th, 2021, it reached a high of 244.46. That purple line that you see right there is a monthly level. So if you see a purple line, that's a monthly level of resistance. And by the way, we came right back to that level. If you look here, and that happened in 2024. That candle right there, that monthly candle, was November 2024 and December 2024. So what happened? Price came, reached that level. What happened the very next month? It opened here and it closed and it continued to drop. Then we had this nice hammer candle that you see right here on the monthly. It got above the cloud, and look what happened for the next 5 months. It's been moving up steadily. We are still, okay, in a very strong uptrend here with the Russell, but we have not surpassed yet. We have not closed on the monthly chart above the 244.98. We haven't closed above that 244, okay, 98. When I mean close, I mean the candle itself, the body of the candle hasn't closed above. It has pierced it. You see that wick right there? Let me zoom in again. Do you see how that little wick is popping here on the daily chart? You can see that's today. That's today. So this is a very important day today. But what happened the second day? So it basically price gapped above, making that higher high from the prior day. But it's now, this morning, 10:23, as you can see right here. If we go to the 1 minute chart, it's been declining. So there's that purple line at 244.98. You can see it popped above it here, briefly gapped up. That's the green line. That's the opening price today. Okay, that dotted green line. On a shorter time frame, that's the cool thing about this software that I use. It will, you can actually select to add that through the chart properties, edit chart properties. You can see the show yesterday's close line, shows yesterday's high line, whatever you want to do. You can do all these things. Really cool. Anyway, and by the way, if you guys like this software, it's called TC2000. There is a link, all right, in the description. There will be a link in the description section. There's a link on my page. Might as well show you guys that right now before we continue here. At the very top here, click. This is how you can join to become a member, so you can watch these videos like the one tomorrow. Hit the join button. And you would need to become, there's 3 levels. You want to become either a Blue Cloud trader to watch that video or a Blue Cloud Legend level member. The advantage here to upgrading to a Legend level member, if you're a Blue Cloud trader, is the fact that you'll have daily trade updates on my trades. Okay, I post them every day before the market closes. And I also share more additional trading ideas every day. And so what will happen is once you've joined, there'll be a new tab that pops up here next to posts. It will show up as membership, and that's where you'll be able to access that, okay? And if you want to get the $25 coupon for the software, right next to that link, you'll see this, 8 more links. What you do is click on that. All right, you can read a little bit about the channel, but scroll down, okay, and then select, it's the third link down, $25 coupon for TC2000, okay? Check out some of my other ones, like my X page or Patreon or whatever, too. You click on that, you add your email here, and it says here, yes, I would like to receive email relating to TC2000 products. you will receive a $25 coupon towards your TC2000 service courtesy of Blue Cloud Trading. To be eligible for the coupon, you must not have used this service in the last 12 months. Here's the pricing stuff, information. Okay. If you do biannual, it brings down the prices significantly. If you pay once every 2 years. If you do monthly, okay, there's the prices. I would recommend the premium. That's the best one, in my opinion, for someone that's starting off. I do use the premium plus because it does have more features down here that you can look up. But if you are just looking to be able to draw on the charts and just have a lot more features, I would start off with this one and maybe try that out. Or you can try the basic. I mean, the basic, and just see what that is. You'll be able to use that for free since you get that coupon. Alrighty. Okay, let's get back to what we're talking about here. Let's go to the daily chart. So like I said, Russell 2000, it did get above, but now it's dropping a little bit. I'm not going to be, even though price is above the moving averages in the cloud on the daily and on the weekly, it is stalling there. So it's not a time that personally I would be adding a position. If I was thinking about buying this ETF, no, not right now. I'd want to wait for confirmation price to get above that level personally. FEZ, the Euro stocks, is also hitting a level of resistance, 61.50. Now that one's on the daily level, so it's hitting that high right there from that candle. And here's that's the weekly, sorry. Here's the daily chart. But it is a daily resistance level based on the candle from August 22nd. So it needs to get above that. 61.50, in my opinion, is under it currently. We'll see if it can do that. We do have a higher low right here. Okay. And basically, it's kind of like an ascending triangle pattern that you're seeing right there. So that's very bullish if price can close above that level. How about the VIX? It's up slightly in it right now, 0.13%. Okay. Nothing major. We're still at very healthy levels of 15.7. The VIX is the volatility index. It represents volatility and fear in the markets, and it's kind of stable right now. It's nothing too crazy and volatile like back in April, where we reached a level of around 61 with the tariff announcement. Okay, so now we're going to go into the CNBC stocks real quick. There's 23. There's a whole bunch of stocks. I'm not going to spend too much time on all of these. Very quickly, just give you a quick assessment on the daily chart. I've already reviewed the weeklies on these. These are all looking good on the weekly, the ones that with a blue flag. The ones that don't have a flag below here are not stocks that I would personally be adding a position in at all. And I'm not suggesting that people go out and buy everything that's blue here. Okay, I'm just saying that they look very bullish on both the weekly and daily time frames as far as the Ichimoku indicator is concerned. So let's start off with CrowdStrike. And you can see here on the daily chart what happened yesterday on Thursday, September 18th. It broke through the Ichimoku cloud. And we also have the Senkou Span A now crossing above the Senkou Span B right there. That's bullish. It was under the purple line. Right now it's crossing above. ADX is moving up, like I said. You could see that. In fact, here's a perfect example of how this directional movement index can be so useful and helpful. Because, yes, I mean, I personally like to wait for price to break above the cloud. But hypothetically, if you were just to use this indicator alone, even this alone is a pretty solid indicator. Because if you go straight above, if you go, again, let's draw a trend line from where the ADX started moving up and the positive DI was above the red line right there. Okay. Even though price was still under the Kijun-sen here, you can see that big move up. It moved up approximately, what was that? 17.2% from that point. So I like CrowdStrike right now because it is also above the clouds, confirming things. It's going to be coming close to resistance. It's about 3.5% away from that level, these highs. Gold, I like gold as well. It's up 0.48%. It pulled back a little bit yesterday and Thursday, and then bounced right off that Tenkan-sen, like it does many times. Here is another example of where it came to the Tenkan-sen, and then boom, moved back up. The buyers started stepping in. So gold, I think, is still very strong. GRNY is Tom Lee's ETF. This one broke through that consolidation box that you see right there back on September 10th, and it's been moving up since that point, like I said it would, or I expected it would. I can't predict the future, but when I see price breaking through a consolidation stage, I'm more bullish because it represents momentum is increasing, and you can see that here again with the positive DI above the negative DI. HBAN also looks good. Huntington Bank shares. This one is building a consolidation box right here, okay? Or a Darvis box. Look that one up, folks. Check out Nicholas Darvis online. He's got a great book on trading. Yeah, one of my favorite books. But check this out. It's stuck under that level right there. But I like it because price is above the moving averages. It's above the cloud. We got a bullish cloud, and it looks good again on the weekly chart as well, with price above the moving averages and the cloud. All right, let's go to KBE. That's the Spider S&P Bank ETF. That looks good, holding up. It's down 0.79% today, but overall, strong uptrend. Newmont is one of the stocks that I've been holding since August 25th. It's up over 13%. Beautiful. Love that. RKT is Rocket Companies. That one's under the Tenkinson today. It's down 0.80%. It was under yesterday as well. You can see the 9 period right there. On the weekly chart, still above the moving averages, but it formed this reversal candle. That's a spinning top. These are not really bullish candles. I'll show you guys what that looks like right here. Bearish. If you see one of these types of candles at the top of a move, it's very bearish. If you see it at the bottom of a move, like over here, that's, you know, then it's bullish. In this case, it's negative because you're seeing it at the top. Doesn't mean necessarily that this thing is over. It could certainly continue moving up. These are not guaranteed to reverse, obviously, but there's just a higher probability of a pullback based on the weekly chart and what I'm seeing on the daily here. All right, so I would not be adding Rocket Companies today, for example. SoFi, on the other hand, looks great. This is one of the stocks I'm also holding. Added this one on September 15th. It's up over 7% right now. SYF looks great too. Synchrony Financial. I like this one too. That looks good. XBI, it is consolidating still. You can see that in a little box right there, but I like it overall. XBI, this one here broke through this little level right here, that little consolidation there. And right, you can see that. Whoops, hold on. Yeah, right about there. Let me just see if I can draw a trend line. What's kind of cool is if you like do that and then hit the space bar, I think twice. Whoops, hold on. There's like a cool thing that you can do here. Yeah, see, come on now, work with me. There we go. So you saw what I did. I just kind of dragged, so you can like hold down, and if you basically run it, like create that, set it up where you want, and then double click the space bar, it will create it. So that's kind of nice. I like that. So this one broke through that little ascending triangle that you see right there. Right? There's a nice pattern. XLF. I like XLF too, even though it is still stuck. I would want it to break above. I would want it to close actually above this candle right here, personally. Because right now it's been stalling. You can see that with the little shooting star, and then it's under there, the 54.25. Now, the rest of these stocks, like COLB, as I mentioned earlier, they don't have a blue flag. They're not as bullish, and not something I would consider. Here's an example of one. The faster moving average is under the slower. So no on the Columbia Banking. CWEN is obviously in a very bearish scenario here. This is where Ichimoku shines, because what it stands for, what Ichimoku stands for is at a glance. And that's what we're seeing here. At a glance, you can see very quickly, this is not rocket science. Price is under the cloud, okay? Stay out of that stock because it's in a decline. It's out of favor. People are not buying it. The momentum is increasing to the downside. See how the negative DI is above the positive DI and the ADX is moving up. No. Big NO on that one. Okay? DHI. Same thing. It's under the moving averages. It has had a nice move, but I think DR Horton right now would not be adding it as long as it stays under these moving averages. On the weekly chart, it's still good overall, but you can see how that spinning top, that negative spinning top, led to the next week dropping, right? And that, of course, is after this nice big move that you see right there. So something to consider. EA. EA is Electronic Arts. That one's moving sideways right now. Why didn't I add the flag up for EA? Well, let's look at the weekly chart on that one. There might be something off. Oh, this is the weekly chart. Sorry. The weekly chart looks good. The weekly chart looks good. The daily chart is the one that's got an issue. The faster moving average is under the slow. You can see it turning over here. I don't like that. INTC gapped up on the daily chart, but what does the weekly look like? It's still under the 200. In fact, it touched the 200 and drew back. LEN is under the Ichimoku cloud. No thank you. LYV, bearish engulfing pattern. I did have a position in this back here. Bearish engulfing pattern. It did move up, but today it was down 1.23%. I don't like this pattern on the weekly. Here's a daily chart. It's under the Tenkan. So it's basically pulling back to close to where I got out. Didn't really last that long. Here's MasterCard. I got out back here on this one. Was just a 5.4% profit on that. But it's under the moving averages on the daily. NTSK is Netscope. They just briefly talked about that. That was introduced to the markets yesterday, Thursday. Let's look at the shorter time frame, like a 3-minute, and see what that's looking like. Okay. So we're looking at Netscope. We're looking at it on the 3-minute chart. Here was the opening price back on Thursday, right at around 12 p.m. The opening price was at $23. It's at $24.80. So it's moved up a little bit. It's up 10.45% today. Here's the daily chart. Okay. Let's keep going. But the thing is, right, this is a just introduced to the markets. There's not enough data for me to analyze here. So these are the types of stocks I don't typically add positions in. I'm looking for an established trend before I consider adding a position to any of my any stock to my portfolio. Here's NVR. This one is under the moving averages right now on the daily chart. The UUP is a US dollar. Here it is on the daily. It's been kind of stagnant for a long time around the $27 level. Here's the weekly chart under the cloud, bearish. XHB, Home Builders, is above the cloud on the weekly, but on the daily, it's not. It's under. So it actually entered the cloud today, down 0.76%. And you can see here on, that's a 4-hour. Let's go to the daily. There's the daily chart. You can, by the way, that's the cool thing about this indicator. You can select you can set up your times, up your time limits by moving right here, clicking that little triangle, and you can see all the different time limits that you can put in there. You can set it up the way that you want to and edit this whole area. You can also, when you're looking at a stock, like let's look at MasterCard, you can see you can add all of these fundamentals at the top, whatever fundamentals you want, right? So if all you do is, again, right click, edit the toolbar. Okay, and then let's say that you wanted to add a row. I could do that, and then I can click on the plus sign, and you can see all the different options here of the things that you can add. Like, look at all those fundamental options. You can add any of these, and it will just pop up right there. Maybe I want to check out the price to book. So I click on that. There it is, okay. And watch what happens now when I hit OK. There's the price to book. See it? 64.98. So, yeah, remove that field. Boom. Okay. Anyway, so let's get back to XHB. I have a tendency to go into different directions here, but XHB, I would stay out of that one. Right now, it could certainly just as easily pop very soon in the next, maybe next week at some point. But right now, it's not the time to be adding today. And then let's look at Mag 7. We're going to look at some of these. Not all of them. Well, not all of the Mag 7s. Some of them are in my portfolio, and I will be going over those over the weekend. So here's Meta stalling at the 796.25 level. That's the reason it's something I'm holding off on. But at some point, I'm going to add Meta. I do like those new glasses. I've been checking out online. You guys saw the video where they talked about those Ray-Ban glasses. I'm very interested in potentially buying those when they're available. Anyway, let's see. So Meta. I want to check them out, though, first. Maybe go to Best Buy and check it out. So here's Meta. it looks pretty good. It looks pretty bullish, except for the fact that it needs to break that 796.25 level. There's the daily chart, and here's a weekly. Here's Tesla. Looking strong on the daily chart. It's above the cloud. It's a little extended. So, and personally, and you might be interested in buying Tesla stock, but I just don't. The reason why the price has been moving up is because of the buybacks. It's not because of the sales. If you look at the earnings announcement, the prior one, let's take a look at that real quick. Here we are in FinViz Elite. We're looking at Tesla. And if we look at you see these little boxes here, you can see all the negative prior quarters back here. And yes, the most recent one was relatively okay, I guess. But look at this. It was only up a surprise of revenue of just 0.97%. That's not a whole lot. And if you look at the sales quarter over quarter, they're down 11.78%. Sales year over year down 2.73%. Okay. You can see the sales stalling right there. And so, yeah, not a stock that I'm interested in personally. But you know what? To each their own. You guys go out there and buy up as much of this as you want. On the weekly chart, it does. There's one thing that's also hasn't been accomplished here with the Ichimoku indicator, and that is the cloud itself. The Senko Span A is under the Senko Span B. I would hold off on that just based on that technical, but that's just me. Anyway, so that's where we're at with Tesla. Here's Apple. Apple, also the cloud is still bearish. The future cloud on the weekly chart, the Senko Span A, as you can see right there, is still under the Senko Span B. It's also finding resistance here at that 240, was finding resistance at 241.32. Looks like it might be getting above it right now. Let's look at the daily chart. Yeah, it got above that resistance level today. So Apple looking a little more bullish today. NVIDIA also today up 0.61%. You can see that the reason they don't have a flag is because, like I said, some of the technicals are off there. Tenkan-sen here is under the Kijun-sen, so that's the negative from a technical perspective. But I like NVIDIA overall. I think it's more than likely to break that 184.48. I'm just waiting. I like the company. All right, let's keep going. If I was going to buy a stock, I'd buy NVIDIA over Tesla all day, every day. Silver. Sprott Silver Miners and Physical Silver ETF, SLVR. This is one of our members' requests. Today's a nice little buy signal on silver, SLVR. You can see it had a pullback. By the way, these are the types of stocks that pop up on my scanner typically. They've pulled back and then popping above the Tenkan-sen. And it looks good on the weekly too, right? Still above. Now on the weekly chart, we got a reversal candle, okay? But we've had reversal candles in the past. They're not guaranteed to reverse the price. The overall strength of this momentum here is good. It certainly could. All right, but look right here. See that? That's a little almost doji reversal candle. What happened? It did not take out the low, right? So that's once you see a candle like that, what you want to do is see how it reacts to the low of that candle. If it gets underneath that low, then it's more than likely to pull back some more. Like over here, it's a perfect example. You see that little doji candle? So that was the warning. And then once price got under it, it dropped a little bit. But it was still above the moving averages, and it was still above the cloud. So therefore, it can be a short-lived pullback is what I'm suggesting here. Here's Citigroup still moving up, down 0.48%. I like Citigroup as well. Here it is on the weekly chart. Beautiful. Here's Lyft. Breaking through. Technology. This is up 0.09% on the weekly chart. Broke through that monthly level of resistance of 2152. Now that happened based on that candle all the way back in 2022. That's where we're at. We broke through the 2022 highs, essentially. We haven't broken these other highs up here. Okay, the ultimate high is around 88.60 from March 29th. All right, so that's a level that I would be watching to see if it can ever get back up there. It might. You never know. Like right now, the fact that it's broken through on the weekly chart above, It's above the cloud. We've got a higher low here from the prior one, right? It broke that ascending triangle, and now it's extending. It broke these resistance levels, and it's extending. It's above the 200. And so, and the ADX is moving straight up on the weekly chart. However, with all of that said, there is that long wick on the top there that you see. That's not a shooting star pattern, but it is weakness, meaning that if we look at the daily chart, it gapped up, and then you can see these last 3 days since getting this hammer, which is a reversal candle, it's been pulling back. But here's the cool thing. It is staying above the low of that reversal candle. See that right there? So it has not closed under. And so it's that tells me it's pretty strong. And as it's been dropping, the volume has been dropping. It hasn't been increasing. If it was increasing, I'd be more concerned, because then it would tell me that, hey, there's more sellers, there's more activity, there's more selling pressure. That's not the case here. The ADX is still strong. Okay, so there's a higher probability that we'll get a bounce. Now, would I be buying based on this candle? No, but maybe we'll get a new bullish candle soon, maybe on Monday or something like that, and then the lift will seem a lot more attractive at that point. IBIT is the Bitcoin ETF. That one pulled back into the cloud. So that one, overall, if you look at the weekly chart, pretty bullish. Let's see where it stands. It's at 65.81 right now, and the conversion is at 65.60. So it's above it. So it's above the Tenkan-sen right now. But that's the weekly chart. On the daily chart, it's just not looking particularly great to be adding a position here. If you're holding a position, Bitcoin is one of those assets that you can buy and hold for long periods of time. You have a small percentage, maybe, 3% in your portfolio. This is, again, Bitcoin has moved a lot since 2024 here. Since January 2024, it's up 191.66%. And it's also, the way I look at it is it's almost like an insurance policy against the US dollar. I know it sounds weird, but I know it's not technically a currency. They call it a digital asset. But there's a lot less faith, unfortunately, in the U.S. dollar these days. And so people are looking for alternative places to park their money, right? And have but just in case the U.S. dollar drops precipitously. It's very possible. It's not, or hyperinflation, potentially. Inflation is creeping up. There's a lot of negative things happening in the world. A lot of negative things happening in the economy, and yet the stock market, as you see here, continues to move up. That's what I'm saying. There's no correlation between how the movement of the market and what's really happening behind the scenes, right? So, but yeah, I'm still trading. I'm still in it as long as this thing is moving, and the Ichimoku can help guide us. So that's the purpose of this indicator. And hopefully you found this video useful, interesting, educational. And if you want to support this channel, hit the like button, hit the subscribe button. To do those two things, it's free, right? Hit the like and subscribe button. Hit the join button if you want to see some extra content that I'll be doing this weekend in those member videos. All right. And that's it, folks. Have a good rest of the day. It's Friday. It is now. Let's take a quick look at the markets before we go, because it is still morning. It's a long video here. See, it's they're still slightly. Dow's up 0.11. Nasdaq is currently 0.38%. S&P 500 up 0.2. Russell 2000 down 0.43 ever since it hit that high. So that's why I would not be jumping into the Russell right now. Okay. All right. Talk to you guys later.